You're paying a bill every single month that has never shown up on a statement. It's not a subscription you forgot to cancel. It's not a fee buried in fine print. It's the gap between what you'd actually choose and what you chose because someone might be watching. That gap has a dollar amount. For the person I'm about to walk you through, it ran $800 a month. That's $96,000 of spending over 10 years and closer to $140,000 once you count what that money could have earned instead. Not because they bought anything crazy, because they bought the slightly nicer version of everything. Here's what makes it brutal. You already know how to spot this performance on other people. The leased car, the financed lifestyle. You read those signals instantly, but you've never turned that lens on your own spending and calculated what the performance is actually costing you. That number has a name: your performance premium. By the end of this video, you'll know how to find yours in about 5 minutes, using nothing but your own bank statement. And once you see it, you can't unsee what it converts to in years of your life. Here's the part that should bother you. This doesn't get better the smarter you are. I assumed it would. Learn more, decide better. That was my whole theory going in. But the research kept refusing to cooperate. People who understand compound interest, who max out their retirement accounts, who genuinely know better, they still leak money into looking the part. Knowledge predicts what you accumulate. It does not reliably change what you spend on appearances, which means the fix isn't more information. It's something else entirely. And it's costing you more than you'd guess. Here's the turn most people never make. You pull into a parking lot, you clock the $70,000 SUV 2 rows over. You run a quiet calculation. Financed, probably. Performance, not wealth. That feels like clarity, like you've cracked the code. But here's what you missed. That same scoring system is running on you. Right now. By your coworkers, your neighbors, the parents at school pickup. And because you know the test exists, you're not just buying things you want. You're buying answers to questions nobody asked out loud. So try this. Actually try it. Don't just nod at it. What car would you drive if the people at work never saw it? What neighborhood would you live in if nobody ever knew the zip code? What vacation would you take if you weren't allowed to post a single photo? Which rooms of your house would you actually furnish if no one ever came over? Sit with the distance between those answers and your real life. That distance isn't a character flaw, it's a purchase, one you've been making every month without an invoice. And the bill for looking right was never one purchase. It's 1,000 small upgrades spread across a decade, each one individually reasonable. Collectively, that's what we're about to add up. Let's make this specific. You're 35. You earn $110,000 a year on solid income. You're not reckless, but over the years you've drifted into spending calibrated to look right. The car payment, $540 a month instead of $300. The apartment, $2,200 instead of $17. The wardrobe, the dinners, the trips. Each one may be 15% more than what you'd choose if nobody was watching. None of these would make a financial advisor blink, but add the gaps. Your numbers will differ, that's the entire point, because you're going to run this on yourself in a minute. In this example, the gap is roughly $800 a month. That's the performance premium. A money spent not because you wanted the thing more, but because the cheaper version sent the wrong signal. $800 a month is $9,600 a year. Over 10 years, $96,000. Before you account for what that money could have done, at an illustrative 7% annual return, markets won't do exactly that every year, but the mechanism holds that $96,000 becomes roughly $140,000. One honest caveat, because I'd rather you trust the rest of this. That $140,000 is money 10 years from now, not money today. Adjust for inflation, and it's worth something closer to $103,000. In today's terms, still 6 figures. Still enormous, just not pretending to be bigger than it is. So the performance didn't cost you a car. It cost you 6 figures. Because you bought the slightly nicer version of everything. And here's what should genuinely bother you. You won't find that expense in any budget category. There is no line item called looking appropriate. It's invisible, which is exactly why it's so expensive. So the question becomes, if you can't see it in a budget, where does it come from? It comes from a belief you didn't choose. Researchers analyzed a full year of real bank transactions from more than 2,000 people. Not what they said they spent, what they actually spent. And they found something that explains the whole pattern. People who strongly believe that spending signals wealth, that visible consumption proves you're doing well, spent roughly 13% more on lavish goods. Designer clothes, jewelry, premium travel, and they reported lower financial well-being. Not because they earned less, because they spent more to maintain a story. But here's the finding most people miss. The researchers didn't only measure that belief, they moved it. Tell someone that big spenders are usually the wealthy ones and their stated priorities shift away from paying down debt towards spending. The belief itself turns out to be movable. Now, they tested that in a study, not in your neighborhood. So take this next part as my argument rather than their finding. If one sentence can move that dial in a lab, it's hard to believe the place you work, the street you live on, and the feed you scroll every night are doing nothing at all. You're not failing at a budget problem. You're up against an environment problem, and a budget loses to an environment almost every time. Now, I want to be fair here. Not every nice thing you own is a performance. Some people genuinely love good design. Some spending is strategic. The suit that gets you taken seriously in a negotiation isn't vanity, it's leverage. Some experiences are worth every dollar, watched or not. The point is simpler than stop buying things. Most of us have never separated two numbers, the spending we do anyway, and the spending we do because we're being observed. That second number is your performance premium, and until you draw that line, you cannot know what it costs you. Most people hear the math, nod, and move on. That's the mistake. Because the real damage isn't the money you've already spent. It's what that money would have become. And when you convert it from dollars into time, it stops being abstract very quickly. That $140,000 wasn't lost to a bad investment or an emergency. It was spent on appearances, so let's convert it into something you can actually feel. At a 4% withdrawal rate, a common planning benchmark. Not a guarantee. $140,000 supports about $5,600 a year in retirement. And here's the part to sit with. Not once. Every year. For as long as you're retired. $5,600 a year is a property tax bill handled. It's a year of groceries. It's every utility bill you'll ever pay, covered permanently. That's income you would never have to earn again, traded for slightly nicer versions of things you've already forgotten buying. And that's the cruelest arithmetic in this whole thing. Everything you bought to look wealthy started depreciating immediately. The car lost value the day you drove it off the lot. The clothes went out of style, the dinner was over in 2 hours. But the money was supposed to compound. So the real cost of looking rich isn't measured only in dollars. It's measured in how long your money can buy back your time. So, what do you actually do with this? 4 things, and the first one is the whole video. First, find your number. Pull up your last 3 months of spending. Every purchase over $50, ask one question. Would I have bought this exact version if nobody would ever see it? Not, would I have bought nothing? This version. Add up the gaps, divide by 3. That's your monthly performance premium. Now, here's the shortcut that makes it real. Take that monthly number and multiply it by 173. That's roughly what it becomes in 10 years at 7%. So $200 a month is about $35,000. $400 a month, about $69,000. $800 a month, $138,000. And $1,000 a month becomes $173,000. One multiplication, that's your number. Write it down. Second, name your audience. Who are you performing for? Your coworkers, your neighbors, your parents? An algorithm. You can't opt out of a performance you've never identified. Most people are quietly stunned to realize they're spending real money to impress people they don't particularly like. Third, redirect the gap. You don't have to cut it to zero. Take the premium, even half of it, even a quarter, and route it somewhere it compounds instead of depreciates. The mechanism works at any scale. Fourth, change the inputs. If your environment is priming you to spend, the cheapest intervention isn't willpower. It's changing what you look at every day. The neighborhoods you browse on Zillow, the accounts you follow, the people you eat lunch with. Change the context, and the spending follows. The most expensive thing you'll ever buy isn't a house or a car. It's the invisible premium you pay every month to look like you can afford both. So, run the audit. Multiply by 173. Then decide whether that number is worth what you're currently buying with it. If that's a useful way to think about money, subscribe. That's the whole channel. And if you want the full picture, these 3 videos are a loop. What real money actually looks like. What fake wealth looks like. And now what fake wealth costs you. If this is the only one you've seen, start with 11 things that look like wealth. Almost none of it is paid for.